Well, welcome into a daily editorial here on the KE Report. I am chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. Jordan, let's focus on this maybe temporary breakdown, hopefully temporary breakdown that has happened in the last couple days in gold and even some of the gold stocks. Gold moved below that 1280 level as we're recording this. It's down just a couple dollars today in about that, let's say, 1272 level. We also saw the stocks moving down, and even yesterday you could argue that the stocks were leading that move down in terms of GDX and GDXJ. You and I were also looking at that gold bugs index, that HUI, and how still, unfortunately, bad that chart looks on a medium and even long-term basis. What do you think about the reaction that we're seeing in terms of stocks with that move down in gold?
Well, the move down has not been the move down in the stocks has not been that bad considering the decline in the metals. I mean, this is not several years ago when you'd get gold down 1 or 2% and the miners would be down like 3 or 4%. So it's not quite that bad, but nevertheless, I mean, it's still not good, for lack of a better statement. I mean, I think what's interesting is if we go back to, I want to say it was last Wednesday or Thursday after we were talking, one of those days, gold was up and had a really nice day and the miners were down, and there was a clear divergence there hinting at, what could potentially be coming. And since that point, precious metals have basically been down every day. Now, looking at gold, gold has lost support at 1280. I mean, some people have said it's formed a head and shoulder. Some people have said it's formed a descending triangle or a bear flag. Whatever it is, it's bearish. And with the break below 1280, Corey, there's a measured target down to as low as 1210, maybe 1220. You have the 200-day moving average at 1253, and that is probably going to be tested. And then, the measured downside target is even lower. So unfortunately, this break has projected downside targets that are much lower than where we are right now, which is 1275. And you could probably say the same for the miners, although I would say that I did put out a flash update, as you saw, late last night, and GDXJ is getting really oversold based on my breadth indicators. Now, the Huey is not quite as oversold, but it's still getting oversold. And so my thinking coming into today was we would probably see a bounce begin, if not today, then probably tomorrow. So even though, gold has cracked this key level, and the miners have started to lose their March low, although GDX and the Huey have not quite lost their March low yet. So even though we've kind of had breakdowns here, the miners are setting up for, I don't think it's going to be a huge bounce, but they're getting fairly oversold here. So I would be surprised if we did not begin to bounce end of today or tomorrow.
So does this all just lead to more of this range-bound trade? For gold, at least it came close to trading in the upper part of its range, but for GDX, it got back into that long-term range it was in, but I think the argument can be made it was still a little ways off of the upper part of its range.
Yeah, it really depends what range we're talking about here exactly, because, I mean, if you're saying, gold has been, or if you're saying GDX has traded in a range, it definitely has. I mean, if you go back to after the big correction in the summer of 2016, it's basically kind of traded between 17 and 25. However, if you look at it, there are slightly lower highs. If you're looking at a weekly candle chart, you can see how 23 is a very important level. And, I'm looking at the daily chart. We've tested 23 almost 4 different times in the last 2 months or so. So, failing to exceed 23 with respect to GDX, that's setting up a lot of supply in that area. And now the market's starting to roll over. It's probably going to test the 200-day at some point. GDXJ, by the way, it's also very, very close to its 200-day. GDX has to fall a little bit more to get to the 200-day. But, and the same thing with gold in the range. The point is, we could be going to the lower end of the range, which I don't know if gold is going to retrace its entire move. But, for GDX and GDXJ, I would not be surprised if they came back down and had a shot to make a real big double bottom around those lows that we saw.
So for GDX, you're talking like 17 or 18 region.
Yeah, I think it's definitely possible. I mean, 18 is a level I'd look at for GDX, and for GDXJ, I think it's 26. Yeah, those are the levels that I would be looking at. It doesn't mean they're going to happen, next week or next month, but looking at the bad price action that we're rolling over from, and potential downside targets. And in addition to that, Corey, we also look at the fundamentals. And, we've been talking about how the Fed needs to cut rates for the sector to start a new bull market. And, we kind of got close to that in the last month with the market basically pricing in a rate cut in the next 12 months. But, what has happened since then? Well, global equities have recovered. The stock market has recovered. Now it's on the cusp of a new all-time high. And, we've seen economic data not just start to stabilize a little bit and perhaps get a little bit better. China's pumping a lot of money in. The lower rates that we've seen, that's starting to help housing, which was a real drag on the economy. So it's not that things are getting, so much better and things are going to be fabulous in the next year. It's just that things are just turning a little bit. They're just improving a little bit. The stocks or S&P is looking like it's going to make new all-time highs. Those things are altering the expectations of a potential rate cut later this year to the market thinking, well, maybe we don't need a rate cut that soon. And so gold over the last couple of years has just been trading based off of these, rate cut expectations for the most part. And so, we're seeing those expectations shift a little bit more hawkish. It doesn't have to be a lot more hawkish, but because they're shifting a little bit more hawkish, we see precious metals, failing to break through resistance and rolling over again. And so that's why, over the next couple of months, we have to be wary of, look, there's potential downside down to those levels that we talked about.
Well, and there's a key distinction here, talking about that run that gold went on, really that started about September or October of last year. There was a lot going wrong in the world, and the central banks were getting worried, investors were getting worried, and that's why I think the attitude towards gold and even the gold stocks got fairly bullish. I'd even say quite bullish. But the fact of the matter is, you could almost say that that was near extreme levels of just how bad things were going around the world. And now that markets have recovered and there's a little bit of stability in not just the US, but some other markets and sectors, then you know what? Gold does unfortunately kind of sell off. But I think that leads to a bigger question of, is that high in February that we saw for gold and even gold stocks, is that going to be the high we see this year?
There's a good chance of it, because if you go back over the last 6 or 7 years or so, and especially with the gold stocks, most of the highs for the year, other than in 2016 when it was in the summer, those other years, most of the time it's been in January or February. I think one of those years it was in March or April. So, now we're a couple months forward since February, and we're looking back at the highs in gold and the gold stocks and thinking, now there's a risk where that could hold up for the rest of the year. But Corey, you never know, what's looming in the future. I mean, we are late in the economic cycle, so we shouldn't expect that much strengthening in economic data. Next year is an election year. If there's any weakness that's sustained, we know that the White House is really going to pressure the Fed for rate cuts. So I mean, it's this is not a situation where we want to get too bearish in the big picture, but we just want to understand, or have to understand rather, that if you look at the fundamentals, they're not quite moving bullish for gold here in the near term. And if you look at the technicals, gold and gold stocks failed to break out. Gold made a lower high, by the way. It didn't get up to 1360. And those things are telling us that more likely than not, we're probably going to get lower prices over the next couple of months. And as for the rest of the year, gun to my head, I would say yes. I think we've seen the high for this year, but you never know. That's just a guess. But yeah, it's certainly not looking great for precious metals right now as far as the outlook over the next couple of months. But this is a market where what we've seen over the last couple of years, if that plays out again, at some point they're going to get very oversold. At some point, economic data is going to soften, and then we're going to see things turn around again. But yeah, it's way too early to expect that right now.
Yeah, I think right now the argument can be that you just don't know what's going to happen, and that actually leads more to the narrative of a range-bound trade, simply because, there are still worrisome signs around the world, and there are central banks that are worried, but there's still a lot of liquidity, and until maybe a full breakdown happens in the U.S. markets, that will kind of restrain gold. Let's also quickly chat about what's going on in the silver stocks today, though, because the silver stocks moving down fairly aggressively, down about 1.5% today, and that's without silver breaking down. That weekly chart, even that monthly chart for SIL, boy, it sure doesn't look good. 2016 was a little bit of a bright light in an otherwise pretty prolonged downtrend. What's the silver stocks telling you about the sector?
The silver stocks they're basically leading the sector lower. Although I would say one reason I'm expecting a short-term bounce in the sector is because silver actually, I think it started to break down or crack a little bit before the silver stocks did. So in silver over the last couple of days, it's kind of started to stabilize. So, that's a positive for the very, very short term. But as to silver stocks, Corey, pulling up the weekly chart, it's just not bullish. It's a lot of selling pressure in the last couple of days. But as far as silver and its ability to be a leading indicator, that's something I would watch. SIL trading around 25 right now. It has support late last year at 22. So if the silver space is going to be a leader, then keep an eye on that, because what I'd like to see is SIL, make a really strong bottom around 22, the bottom from last November. And if that happens before the sector, that would be a really bullish sign. So I would say keep an eye on both silver and the silver stocks as far as a potential leading indicator, because when we start to see more improvement there, especially in the silver stocks, that's a potential, that would be a potential good sign for the rest of the sector. But yeah, here and now, both of those are broken, and they're probably going to trade lower over the next couple of months.
All right, Jordan, we're going to wrap it up there, but if anybody wants to follow along with what Jordan writes to his subscribers and even some of the free content on his website, just follow that link below this interview. And also, if you want more information on Jordan's service, feel free to email me, fleck@kereport.com. I think Jordan really does take a very solid look at what's going on in the sector and doesn't get too bullish, doesn't get too bearish, just lets the charts tell him where he sees the sector going. Jordan, thanks for your time today.